Maximus Analysis here for November 2nd, 2016. And we see the selling continues. It looks like they held basically the lows, which was 21.91, but they came very close. It's FOMC. I don't play around with FOMC because the spreads widen on the futures and options, and that means that my stop can be run without the price moving to that point. Again, remember, options is volatility. Your spread could, it could swell the price of the option without actually moving the underlying based on volatility, and that's how you can get stopped out without it even being there. So I don't even mess with it. Again, the short was the fade off of 21.05, the level that I posted today, and that was it. Again, it got to the 20.93.5, and then it just started to struggle. Okay, and they kept putting, again, people thought it was going to run up and down. Again, I was telling people I don't know where it's going to go. I thought it might squeeze when it got back above 20.93.5, but it's just, again, you go with the highest setups because you want to treat this less like gambling. You want to treat it like a business. Okay, don't mess around with trying to pick the direction of the FOMC. Even people that day trade, the great day traders I know, don't mess with days like this. I mean, I know crude traders that don't even trade EIA. They just like, that's it. I don't trade Wednesdays because I don't like the violence of the move. I'd rather have something more, a higher probability. It is what it is. Learn from the lessons that are going on today. Don't trade those days. Treat this like a business. So let's look back at what we got. We got the flush down. Okay, I'm going to flush down, and we got a break of this upline, got a break of this uptrend line right here. Let's put it like right here. And then we're just getting selling of the rips, selling of the rips, selling of the rips. Break down past this low. They came up to it again. Remember, 2105 was level here, and we had 2100 and a quarter, and they're below that now. So again, it's hard to play this because you'd be like, I don't know if it's completely oversold and they're going to pop it back up to get back up to these levels. They didn't even grain here. So again, overnight action is really going to tell you what's going on. But stop trying to guess these moves. These are very, very difficult moves. Okay. And I'm talking about FOMC. Again, if you've been reading my newsletter, I've been bearish. Okay. So from the beginning, I said 2186 was my level that I was like, and it got a little bit above, but came right back down to it. Again, I'm glad I have these things, documented so you see that I'm not flip-flopping, because I will tell you if I'm wrong. Again, so we're looking here at this 200-day moving average at 2075, and let me tell you something. I have some stuff I'm looking at, and I don't really see, if they continue down, I don't see much support after this except for the 2040 area and I think it's, what is it, the 1990 area. I mean, it's right here, basically getting back to this Brexit low. It's I don't see much. So they got to hold this line right here, 2100. This was our first target to hit on the newsletter as well. 2097 was the first level, and again, I have levels all the way down because that's how you have to treat this. Weekly, we go all the way back, and we see again that we have our uptrend line, but you can see that again there's a lot of air if they get back below, which they're right there, and we still got 2 more days of action. So unless they throw it up real quickly, again, don't be a breakout trader, because a lot of breakout traders here if they stop above this week, and then just put your stops where they need to be. Okay, manage risk. That's the only thing you can really manage. The profits will take care of themselves. Okay, you manage your risk. Again, I've been knocking the table regarding gold, regarding oil. All those things have been breaking down or breaking up, and we had the right side of those trades. Don't blow it by trying to be a pig and adding at a stupid spot. You just basically manage your runners right now. So continue to watch this because the week is not over. So again, really want to see what this volume looks like at this week, but I think that there's more pain to come, and you can see it evident on a lot of the high beta names that the FANG complex that we despise. Well, at least I despise, not because of the names involved, but the way that you don't look at the overall markets. You look at 5 names: Facebook, Amazon, Netflix, Google. Those 4 to 5 names, if they are holding up the market, God pray for us all, because you shouldn't have 4 things propping up the entire market. The NQ was down. Again, continue down again. We want to see if they get back below these lows right here. You also have crude, which again is, like I said, it's like I said, you're looking at it right now. Again, if you took the short, congratulations. Now you should just be rolling your stop down, peeling off some of the position, and that's it. Again, don't be a pig as well. Again, you have a significant move off of these levels that I posted prior. Again, this is prior, so it's no hindsight trading. Okay, you break of this previous low, weekly low. If you didn't fade this, you're already in $4 to $5. That's $4 on a contract, and you risked you was 2,400. So you're 2 to 1 already. If you just took the seller's bar, or if you faded, you're up $6,000. Don't be a pig. There'll be more trades. Again, that's like somebody adding here. Like, don't do it. Like, just wait for the price action to give you what you need. So again, we see the break of the 46.47. We are now testing the 44.78. Well, watch it. See if it holds for this week. Remember, this is a weekly candle, so it's still open until Friday close. Keep that in mind. So again, I'm going to look at something that right now a lot of people are looking at, and it's just to show you not to fall in love with any type of companies. Okay, let's take a look at VRX. Okay, this has now been viewed by a lot of people. You can see that the weekly, how much they have gone down. It's something reminiscent of actually like a GoPro or something like that. But let's see what's going on here. So you saw a lot of volume step in. If you look at the daily, okay, you saw it step in yesterday, and I don't know if that's capitulation. You've seen some high volume. Every time there's high volume, it's either going up or going sideways. So I think the play is that you got to hold these lows. You got to hold, this 1429 area. You have to hold it. Okay, that's the area you need to hold. Okay, it's pretty close actually. So continue to watch that and see where this. Again, you got to hold that. What is it? Yeah, it's getting close. It's 14.29. Again, obvious lows back to here, which is like $18. So just continue to watch, but it's hard to see because it's so tight. But they have to hold this 14.30 area, or they go back sub 10s. Matter of fact, I can't even say sub 10s. I don't even have any levels back below that, so they have to hold this level. You have some volume, but don't let them sucker you in. Again, I'm not one that's going to trade these type of stuff, but I figure that you guys at least could use some type of analysis if you're in it. Again, obvious levels here where they shot up. Now you just want to see follow through. You want to see a break above this $25 area, and especially the 30 area, just psychologically the 30 and the 40 area. And again, it's still in its 20s, but it's a painful place to be. So again, this is why we don't hold on to things, especially if you got common. Like common, when I say common, I mean actually holding shares of things. Common you can hold forever. Again, you don't got a time factor, but you got to remember, look at this. It's $250 stock last year. Last year, dude, it's $250. So again, you manage your risk, and when you're wrong, you get out. So again, those that are holding here now, you got till 14, and you better see that 14 hold, or we're just, I don't know where. Hopefully there's some type of drug thing, but then hope is not a stop mechanism, and it's not a buy or sell recommendation. So be mature about it. If you're gonna play this, I would just be using I don't know, I would probably be day trading the shares or something. But again, this is people make a trade into an investment. That's something you do not want to do. So again, whole of this line, whole of that 14, zero's right here. So keep that in mind. But again, let's look at the overall picture for the ES. And again, they're holding yesterday's lows, or that thereof. I think it was 2091. Yes, they're 2092 and a quarter. So not a big deal, but they need to ramp it up quickly, and again, see if they can get back above this 2116 and a half, 2128. Below that, we break this, and again, you have the levels that you need to be watching. Again, morning levels go out. This morning I did silver, gold, NASDAQ, ES, and crude. Okay, these are the type of things I'm going to give out to the people that do day trade. Again, my service will be more educational and taking trades as well. But again, people that have used these levels, trust me, they're pretty powerful. And again, it takes a lot of time to calculate them, but it's well worth it because it's something you could fade or take off profit and stuff like that. So again, we'll continue to watch these names, and I'll see you tomorrow. Again, remember, trade the days that aren't exciting to most people. People want excitement. They want a top tick, bottom tick. FOMC, really? Come on, let's treat this like a business. Take care.